Hello, I'm Robert Howe. I'm the managing director of AKAMAI Capital and Finance Academy in Honolulu and the CEO of Geomatrix in Hong Kong. For the last 30 years, we've been running investment strategies global and Asian. And for the last 5 years, me and 3 other market veterans have been running a classic equity long short fund that has outperformed the market. And more important, has done so in times when you really need that outperformance, when the markets are down. So we'll talk about that for the next 13 minutes. People often ask me, what's it like to have offices in Hong Kong and Honolulu? And I answer, 2 island paradises. Hong Kong is New York on steroids, and Honolulu is New York on Quaaludes. And sometimes we need a little bit of both. So just a quick disclaimer, past performance, no guarantee of future, and get financial and tax advice if you're going to invest in anything. So we'll talk about why invest with us, who we are, our performance, and how we got there, and the team that got us there. So our returns are superior to and uncorrelated with the indexes. We are global versus US only. I know the US has outperformed almost all markets for the last 20 years, but it's probably time to spread your bets a little bit. It's a hedge strategy, and we'll show you the numbers on that. But the idea is don't lose and even make money in bear markets and keep up with or sometimes outperform the bull markets. And the profit we make supports the AKAMAI initiative to build homegrown talent in Hawaii. So the AKAMAI Finance Academy, we've been operating for some 20 years, and we train our students in asset management and soon in AI, because you need it now, to compete with the Ivy Leagues for the top paying finance jobs on the planet. And we're creating a talent pool for returnees to hire. And some of them we're launching. We have 2 of our graduates are now running strategies with us. So we've been around since, 30 years, inspected 4 times. We have a beautiful office and a restaurant district up an escalator in Hong Kong. This fund is small. It's family and friends. It's basically all our family assets in there. And we also have some money set aside to launch some veterans in new strategies. One of them is Wickham Capital, Asia Value, and we've seeded it with 2.5 million. We put 1.6 million in an India fund. And these are very specialist. China and India are kind of specialists, and we have specialists on them. The Finance Academy, live lab for the students to learn. So the components are, it's about 3/4 the strategy we'll focus on here, and 20% these 2 sub-funds, and about 4% in the graduates. So we've outperformed over long time periods. And the key is, though, that we really outperform when we most need it. So if you look on the far right, the rates riot in 2022, when interest rates went up and markets went into a bear market. We were up that year. Fast forward to the tariff tantrum, first quarter of 2025. Markets were down a lot more at one point, but we ended the quarter again very bullishly. And in the most recent terror in Tehran, or the Straits tangle, we were down a bit but outperformed. So over long term, we outperform, and the low correlation makes us a smarter diversifier than bonds or cash. So how do we do this? It's very simple. We go long companies with rising earnings forecasts, rising ROE. We sell short the opposite. We consider valuation, sure, but profit momentum is really the key to stock prices. So let's look at one of our larger holdings. This is one of the biggest hyperscalers, as they called Alphabet or Google. And the share price is the orange so-called candlesticks. And we're looking at the earnings estimates, which go from the blue line for the last fiscal year to the purple and green and up. And those are future years. And we want them to be higher than the previous, but also the slope to be positive. And look at that kink just recently. Google's really hitting it in AI. They're integrated. They have the chips and they have the data. And their AI is actually leading. So bit of a value play when we first got involved. Intel is now a national champion, and their profits, after shrinking for really years, are turning around. U.S. government owns 10%. And they have a chip technology that stacks the power with the logic without having logic distortions. And they're getting a lot of orders, including from Apple. A niche company is a Chinese robotics company, and the Chinese really dominate in electric vehicles, in robotics, and a growing position in AI. They really are technology leaders, and this company has won some amazing contracts. Even more dominant is really the leading battery maker in the world. Batteries are needed for the electric vehicles, for robots, and really everything in the internet. We're long Boeing, which is until recently has had falling earnings, but is really the culture is turning around after a McDonnell Douglas acquisition, which changed from an engineering powerhouse to really marketing and finance. They've learned their lesson. They have a huge backlog right now. And again, they are a national champion, and aviation continues to be a growth area. In gold, we have a Chinese gold miner. Gold prices have sold off recently, but they've been in a long-term uptrend. And this company has a super strong balance sheet and very, very high-quality mines. We have a big position in Japanese financials. Sumitomo Mitsui Financial is the largest in the sector. And as the intervening in to defend the yen, interest rates are going up, and that's positive for banks. Their interest rate spread goes up. They have a huge deposit base, which benefits, and they're applying AI, like all of the banks and insurance companies, to save in middle management and white collar. And it's a very cheap stock. And just look at those earnings revisions. We love this chart. Now let's look at our short book. A betting company, something called gaming, but really a gambling company. DraftKings has been a leader in this, but they're losing share now to Polymarket and Kashi. And these prediction markets are really gambling competition for them. And you can see the profit forecasts are falling, and still the stock is overvalued. Texas Roadhouse, I like eating there, peanut shells on the floor and good beer and ribs. But the supply, they're really suffering from rising food costs and labor shortages. So let's look at the portfolio. What do you get? You get basically your money works harder in a long short fund. Typically 3 times harder. We're over 200% long, and we're 100% short, and therefore your money is, you have basically market exposure, 96% net exposure like an index fund, but working a lot harder. And we can adjust that net exposure based on market conditions. Looking at where our bets are in countries, we're bullish on Japan, financials, as I mentioned, and the defense, as the current U.S. administration is forcing all of our allies to stand up and spend more in defense. We're bullish in technology in China, and we're starting to buy some of the banks, which have cleaned up their balance sheet. Yes, the property market is not recovering, but they've been licking their wounds and cleaning up their act, and incredibly cheap, and earnings revisions are very positive. Germany's a little like Japan, former enemies and now strong allies, financials and defense there. And we've been relatively bearish on the U.S., and we're long financials in that market. And some of the selected internet and AI plays, we're long there as well. Again, in terms of the sector exposure, we're bullish in financials. The yen, if you've traveled to Japan, you know how cheap the Japanese yen is, and they're defending it at 160 yen to the dollar. So we also invest in these sub-funds. India, it's the only market to outperform the US until about 2 years ago. And the reasons are clear. There's a rule of law. They have both cheap and very educated labor. If you've worked with any overseas Indians in finance and medicine and technology. Japan, I spent a lot of time in my career in Japan. The winter is over there. China has been hated, but the market seems to have bottomed, and it's a technology giant. Europe has been forced to awaken and is very cheap. And we have a market pro in each market, and we meet and exchange information in a formal meeting weekly, and constantly all the time. So I founded Geomatrix, 30 years ago. And at AKAMAI, when I moved to Hawaii, we founded the AKAMAI Finance Academy and then AKAMAI Capital. Before that, I ran AIG's equity money in Japan. And before that, in Japan and Hong Kong for a joint venture of T. Rowe Price and Jardine Fleming. In Baltimore, I started as a technology analyst. In my formal training, I bought my first stock at age 16, so I've been at this a little while. I started right out of, before business school. I was at Data Resources in Lexington, building econometric models of Latin America, so a bit of a quant background. Worked in the World Bank as an intern, really loved that the year after graduating. I graduated from Yale and Harvard in finance. Co-founded the CFA in Japan. Ethics are a big part of what we do, and lots of awards. And awards are past and no guarantee of future, but we've done well. My partner for 30 years is Mirza Hussain. He joined us really as a quant person to help us do quantitative models, but is morphed over time into director of research. Really understands various technologies that we invest in. And attended Rutgers University, which is really kind of an Ivy League. They almost joined the Ivy League. Fantastic school. If you have people who live in New Jersey, you're going to save a lot of money going to the state school that good. He's also a CFA and has been with me for 30 years. Sub-managers, the Wickham Capital is Hal Thomas. The India Fund is Ambar. I'll give you their background before. And Hal has just launched a global opportunities fund. We've seeded that, and it's speculative, but it's done fantastically well. So this is how I would invest my money, because it is my money. This is, to me, a sensible allocation of equity strategies with a main bit that I manage and some specialty funds. And these are some of the graduates that are two of the graduates, and we have another two on the way. The India Fund it's basically matched the market over a long time period. It has been running this a long time, but recently really is starting to outperform. He's been doing this, as I said, a long time. Storied career as an analyst, working in his second office. His office is in Delhi, Goa, and of course our main office in Hong Kong. Hal has done very well against his small cap index, and he's really, as a small cap deep value manager, has outperformed the Hang Seng, and there are not many in this area. So this is the cheapest sector, or cheapest part of the cheapest market in the world. And it's been in a 5-year bear market, which was just terrible for various geopolitical and other reasons. And he's been doing this a long time. He's been a very smart investor at other institutions. Ran the options and futures desk at the storied Credit Lyonnais in Asia. We can cover our corporate structure another time. So just to sum up, you should invest globally, not just in the US. We want to be hedged, because there are times when the market has a hiccup, and Warren Buffett's rule number 1, don't lose. Rule number 2, never forget rule number 1. And do this with veterans who have proven track records. And really, what we recommend is index your main exposure to the U.S. It's now, between various measures, 40 to 50% technology and AI. You'll ride the bubble. But when you want to diversify, instead of bonds or cash, invest a little bit with AKAMAI, help the AKAMAI Finance Academy, and help yourself. So thank you and visit us in Either Island Paradise. Thanks a lot.